Well, good morning. Good morning. Welcome to another interview, a fireside chat. This morning, we're joined by Andreas Kumat, who is founder and managing partner of Active Fund Placement based down in Frankfurt. Good morning, Andreas.
Yes, good morning, Stuart. Good to see you.
A lovely backdrop. That must be Frankfurt, I presume?
Yeah, that's the Frankfurt Eye, a little bit smaller than London, but the same concept.
It's a lovely backdrop. Andreas, it's great to see you. Thank you very much for sparing us some time. I know you're a busy guy. Could you just give me a quick, or give our viewers a quick intro to your business, please?
Well, Active Fund Placement, we are what you call a third-party marketer, focusing on UCITS and alternative investment funds, targeting both institutional and wholesale in German-speaking Europe. No retail. We are a team, so it's 6 people in sales and support, sales support. So that is, in a nutshell, the setup of the company. On the product side, we do not have any focus. We believe that it's of utmost importance to understand what are the current needs of investors and to adjust to their needs and to deliver best-in-class solutions of what is currently needed in the market. Okay.
And you say German speaking, obviously Germany being the...
Germany primarily is the most important market, yes. We work in Austria under a separate umbrella, and we target addresses of international kind that are also active in Germany or Austria, and generally then based in Luxembourg or Liechtenstein. We do not work in Switzerland, for legal reasons.
Oh, okay. Can you explain what the legal reasons are?
Yes, I can, of course. In what we got to know is in Switzerland, and that's quite some years ago, there was a change in the legislation, and suddenly you needed a Swiss license and a Swiss CEO in a Swiss company to do this kind of TPM business, because you could not do what was done before, cross-border introductions. So in order to be double safe, we said we focus on EU/EWR countries. And since then, Switzerland is a bit off the radar. I mean, there's enough to do also in Germany, Austria, and the other countries. No, that's how it is. And usually the Swiss market, a lot of asset managers have them covered in some form, because it's one of the first markets targeted usually. Yeah, and it's done from either French-speaking, German-speaking, Italian-speaking part. It totally depends on the setup.
Okay. I mean, Germany is a huge market. I mean, geographically, it's a huge country, and obviously including Austria there. Can you sort of describe a little bit more about it, how it works as a marketplace, and how the channels work in Germany?
It's more, I would say it's more decentralized market when you would compare it probably to any other European market. That's due to the history of Germany as a country, how it has been created. And you have local hubs, you have Cologne, Düsseldorf, you have Frankfurt, you have Munich, you have Berlin, you have Hamburg, etc. So in all of these local hubs, you find a decent number of investors, banks, institutional investors, asset managers. And yeah, that is one difference when you look at it. So when you go to Germany, you should expect more travel time. In case you go for physical meetings. It's more travel intense to meet people. And yeah, when it comes to the different channels, I mean, it's fairly broad. You know, we do institutional sales, so that is pension funds, insurance companies, and on the wholesale side, we talk primarily about family offices, fund of funds, and also the line between institutional and wholesale, of course, is a bit vague, because it's a question of definition. There are very large multifamily offices with their own fund of fund structures. I don't know. And then you have insurance companies that have their own asset management arms, etc.
Yeah. Okay. It's interesting because sitting here in the UK, London is, we're very centered around London, and a lot of decision making is in London. I'm from the north of England, so I'm proudly northern. It's disappointing, but there are some people up in the north. But you're saying that in Germany, you've really got to cover the whole market. I guess there must be some central decision making process in places like Frankfurt and Berlin, but
Frankfurt, I would say, for what is capital markets in banking, yes, right, but we are not really related to this. We are in the process of fundraising for investment funds, and these investors and distribution partners are really distributed all over the country. So you should, I think it's difficult to compare to London. Frankfurt is a fraction of London, first of all, and then, but when you accumulate the whole country and all the different local hubs, it gets to a decent, important size. Yeah, that's probably how you should compare it.
Yeah, and when obviously part of these conversations I'm having is really trying to allow fund managers, investment managers to understand the market. When it comes to Germany and Austria, what are some of the do's and don'ts? What should managers expect when they're coming into to a market like that?
Okay. Well, I would say the do's are be prepared that things can take a bit longer than in the UK, because it's a bit more not relationship based, but it's a bit more trust has to be developed in some form. Even when there's a very good product, they will still maybe want to put it on a watch list, observe it for some time, make a first investment to test the water before they really get in.
Yeah.
So that is most likely the process. You can be lucky and you can have a fast, big shot and then believe this is how it works in the market, and you will be very disappointed.
Yeah.
So that is important, I think, to have some realistic expectations of the time things can take, and then it scales up. In my opinion, really, year 2, 3, 4, not in the first year. Okay. And that is what you should be prepared for and have budgeted in some form, so you know what you are engaging with. And I think, secondly, the do's probably, I think it's important to have a team on the ground, which is German speaking, understanding the local culture.
Yeah.
Yeah. So to fly in and out from basically London, Paris, New York, wherever, it's okay, but it will not really lead to the same level of results.
Yeah. And what about some of the don'ts? What are the mistakes that fund managers make? You go into the market like Germany and Austria.
The don'ts, in my opinion, are primarily when you believe you can do it the same way you do it at home. And
okay.
Yeah, you just copy paste your processes, you don't adjust. That can lead to situations where you get disappointed.
Right.
And
you don't mean investment process, do you? Or you mean
no, I mean, like even the way you present, it's not like rushing into a meeting, 25, 30 minutes, running out, rushing to the next meeting, having 10 meetings a day. That's not exactly how it works.
Right. Okay. That's, yeah. I think that's true for many markets, I think.
And there's nothing wrong about it, right? It's but I think what matters is that, yeah, I would say that the people you meet get a good impression and understand that that they are meaningful for you in some form, and that you are investing into a relationship with them.
Yeah, I think it's very, very important. And when you're looking at an investment manager, what helps you make the decision as to whether or not you go with them? Obviously, yeah, performance is almost a given. Yeah, it can't be fourth quartile, but what are the other aspects of sort of, I guess, the stuff you look for when you're looking at an investment manager directly?
Well, we said performance, obviously, and besides performance, yeah, basic things, like, do they have the right legal structure to offer locally? If that's not the case, then the performance can be as good as they want, but it will not work. Let's say when they have the legal structure, then it's more the question of the setup of the company. So will the how is the asset management, how is the sales, the existing sales organized? Do we have a contact partner within the organization that is really managing the relationship? Can we be assured to get a response rate that is somehow reasonable? Is data proactively delivered, or do we always have to run after everything?
That can be the challenge. And I guess one of the things certainly I've had over the years is when you need content, you need things to go out and talk about.
Yes, if you don't have anything to talk to, just call people and ask, why don't you invest yet? It's not a solution.
It's not. It's a challenge providing that. And I guess when it comes down to it, commitment from a fund manager is very important. And you and I both work with managers, all over the world. Making time is important for you. I guess it must be the same for you as anybody else. What sort of commitment do you need?
We believe our role in such a relationship should be to be the outsourced partner on the ground to really cover the market, to have, yes, a relationship manager on the other side, which responds in a decent time frame, but it's also not rocket science. I mean, we talk about presentation, fact sheet, the usual things, a due diligence questionnaire, maybe an RFP. Otherwise, the involvement is relatively limited. It's involvement in roadshows, so in one-on-one meetings, in video conferences that we organize, that we have to prepare, of course. We prepare, we do the follow-up, but they get briefed, so to understand what to focus on. And then there's an ongoing reporting from our end about the activities. So I want the manager to manage, that's how I see it.
So you're providing reporting back to the investment managers. But when it comes to time commitments coming over, how many times a year would you expect an investment manager to come into Germany? Once, twice?
Two, maximum 3 times.
Yeah, that's what I thought.
I think anything that is more urgent, we can have a video conference, especially after this COVID experience. I mean, it's normal business nowadays.
It is become more common. At the moment, there's lots of different strategies out there. What's really hot in Germany? What are people looking at the moment? Today will be different from tomorrow, but we all know that.
Depends whoever watches this, when he watches, of course, or she. I speak now in April 22, and I would say it's still one aspect where we see strong demand is sustainable emerging market debt.
All right.
Hard currency.
Interesting. Okay. Emerging market.
Why? Because it still delivers some yield. Okay, the German market might be a bit specific in this because fixed income is the most important segment of the market. And obviously, when you look at the environment, you see what you get elsewhere. So let's say if you say you have a target return of 3.5 to 4% plus, and you have a limited choice. Let's put it like this.
Yeah, with rising interest rates, as we've seen.
That may change over time, of course. That's what I'm saying. It's just a snapshot now. I think, I mean, we are in Europe minus almost 60 basis points still. So that is not
really.
Minus 50 or 60. I mean, it changes on a daily basis, but it's still far. That's the short-term rate, right?
Yeah.
But when you look at investment grade bonds in Europe year to date, I mean, they are minus 5%.
Yeah, that's not good. That's not that. It's the emerging markets. So just going back to some of the, I guess, the requirements from your point of view when you're choosing, you're sitting down with a fund manager and you're saying, well, okay, are we going to go with this manager? I guess you've almost got some established funds which have been going a number of years, and maybe in the US or in the UK, and they want to come into Europe. Then you've got brand new fund managers or brand new funds. I guess it's got to be a case of looking at the seed money, the size of the fund, I mean, are those must be key areas for you, or can you need to have a good sized fund, or can you go out with a brand new fund?
We can do, and we did in the past both. Of course, when you have a business model that is primarily success based, it's important that you have cash cows, you know, bread and butter business. So that means decent fund size, long enough life track record, etc. So that works with everybody. And when you go out to raise seed money, or you have a new fund or a fund that has just a track record of less than 1 year and maybe maximum 50 million, your audience is somehow limited. You know? And then to raise, if you raise there 10 million or 6 million, it's much more meaningful than if you raise the same amount for a 1 billion fund, of course.
Yeah, exactly. Yeah.
But the economics are the same, or even probably they are not even the same because it's more work.
Yeah. We have a saying within GemCap that we like to work with managers who share our values, and also one of those values is having fun and enjoying it. And
yeah, of course. I mean, that's a very important aspect. You know, especially when you work with a let me call it early stage asset manager. I mean, if there's no good chemistry, you just forget it. I mean,
There's a short meetings. We're very short. But we've come to the end of our time, Andreas. Look, it's been a great pleasure to catch up with you. I look forward to seeing you in Frankfurt, and you can show me the bars and the restaurants of Frankfurt, the good ones.
That's a pleasure, Stuart. You will. I know you know Frankfurt already, but I'm sure we can make you discover 1 or 2 new spots.
I look forward to it, sir. I look forward to it. Look, it's been good to catch up. We'll speak soon.
All right. Thanks a lot.
Bye.
Take care.